Michael Burry is a genius. He is the oracle of the modern age. A man who looked at the towering edifice of the global financial system, saw the cracks in the foundation and bet everything on its collapse. He is Christian Bale playing the drums in the basement while the world burns. He is the Big Short. He is also, statistically speaking, incredibly bad at predicting the stock market. Since 2008, Dr. Burry has predicted around 50 of the last 2 recessions. If you had followed every single one of his tweets, sell signals and cryptic warnings about the end of Western civilization, he wouldn't just be broke. He would be living in a bunker made out of canned beans, wondering why the S&P 500 is trading at all-time highs while you're trying to barter toilet paper for antibiotics. Today we are going to look at why the most famous bear in history keeps getting mauled by the bull. We're going to look at the psychology and the pure, unadulterated nihilism of betting against the American economy. Welcome to the end of the world, again. But this time, it's different. This time Michael Burry didn't just delete his Twitter account, he deleted his entire hedge fund.
That I must close down the fund. Sincerely, Michael J. Burry, MD.
He looked at the market, looked at his investors, and essentially said, I'm taking my ball and going home because you people are insane. And why? Because of artificial intelligence. Burry spent the last year betting against the AI bubble. Specifically, he bought massive put options against Nvidia and Palantir. We're talking about a notional value of over $1.1 billion. Now, the media loves to scream about a $1 billion bet. But let's be financially literate for 1 second. Notional value just means the value of the shares he controlled. He actually spent about $9 million on the premiums, which is still a lot of money to set on fire, but it's not $1 billion. His thesis was pretty smart. He argued that AI chips depreciate faster than companies are admitting. Basically, Nvidia chips are like milk. They spoil in 2 years, but companies are accounting for them like they're fine wine. It's a brilliant accounting argument. The problem is that the stock market doesn't care about accounting. As I said before, the stock market just cares about vibes, and the vibes for Palantir were up 174%, while the vibes for Burry were shut up nerd. So what does a hedge fund manager do when he quits the game? Does he retire to a beach? Does he take up knitting? No, he starts a Substack. I'm not joking, Michael Burry closed his fund to launch a paid newsletter called Cassandra Unchained. For the low price of $379 a year, you can receive direct updates on why your life savings are about to evaporate. It is the ultimate pivot. He realized that managing money is hard because you have to actually make money. But selling fear? That is a high margin business, baby. This move to speak freely without regulatory oversight is classic Burry. He wants the credit for being right without the annoyance of having clients who ask questions like, why are we losing money while the S&P 500 is up 20%? He has ascended. He is no longer a money manager, he is a professional I told you so artist. But before he quit, he gave us one last masterclass in chaotic trading. In 2024, Burry decided that the only value left on earth was in China. He loaded up on Alibaba and JD.com. He made JD.com his biggest holding. He was big long China. Then, a few months later, he sold it all. Then a quarter later, he bought it back. Then he bought put options to hedge the thing he just bought. He traded Chinese tech stocks with the emotional stability of a teenager on TikTok. 1 minute he's a value investor buying the dip, the next he's a macro trader fleeing geopolitical risk. It turns out, to find intrinsic values in a market where the CEO can be kidnapped by the government for 3 months is challenging. His Alibaba trade wasn't just a loss, it was an identity crisis. It was the moment he realized that value doesn't exist when the rules of the game can change overnight. This brings us to the core issue. Burry treats the economy like a physics engine. Input A, high interest rates, plus input B, consumer debt, equals output C, recession. It's a logical formula. But the US economy is not a physics engine. It's a 300 million people buying things they don't need with the money they don't have fueled by vibes and federal spending engine. In early 2023, he tweeted one word: sell. The market proceeded to rally for 2 years straight. If you had listened to him, you missed the AI boom, the infrastructure boom, and the crypto boom. You stayed safe, and you stayed poor. Being early is indistinguishable from being wrong. And Burry has been early since 2015. He warned about crypto, it doubled. He warned about Tesla, it tripled. He is the boy who cried wolf, except the wolf is actually a golden retriever that keeps bringing everyone money. But of all his hated enemies, nothing makes Burry angrier than your 401k. Since 2019, Burry has been screaming that passive investing is a bubble. He calls index funds, like the S&P 500 ETFs, the new CDOs. Yes, he thinks the boring, safe fund your HR department told you to buy is actually a weapon of mass destruction. His argument is simple. When you buy the S&P 500, you aren't analyzing the companies. You're just blindly buying the 500 biggest stocks. This means that the price of Apple goes up not because Apple was doing well, but because money is mindlessly flowing into the bucket. He says this breaks price discovery. It turns the stock market into a Ponzi scheme where the only thing that matters is liquidity. And honestly, he's kind of right. We've reached a point where if the S&P 500 dropped 20%, the Fed would probably just buy it to stop everyone from crying. But once again, being right about the mechanism doesn't make you money. If you agreed with Burry in 2019 and pulled your money out of the index funds to pick undervalued small caps, you missed out on the greatest wealth transfer in history. You became a purist. And in finance, purist is just a polite word for poor. So, if Burry hates tech, hates AI, and hates index funds, what does he like? He likes misery. Burry's portfolio is basically a bet that society is going to collapse, but in a profitable way. Exhibit A, the GEO Group. In 2022, while everyone was buying tech, Burry bought private prisons. His thesis? The economy will crash, people will get desperate, crime will go up, and we're gonna need more cages. It does take a special kind of nihilism to look at the recession and think, ooh, incarceration is going to be a growth sector. Exhibit B, water. At the end of The Big Short, it says that Michael Burry invests in water. But he doesn't buy water bottles, he buys almond farms. Why? Because almonds use a ton of water. By owning the land with the water rights, he is effectively hoarding the most precious resource on earth and exporting it as a snack. It's virtual water. It's brilliant. It's also the kind of trade a Bond villain would make. And finally, gold. Just before he closed the fund, he bought the Sprott Physical Gold Trust. Gold is the ultimate I don't trust the government trade. It's what you buy when you think the dollar is going to zero and we're all going to be trading shiny rocks for goat meat. Burry isn't investing in the future, he is shorting the present. So, is Michael Burry kind of a fraud? Well, no. He's a brilliant pathologist. He's amazing at diagnosing the disease. He knows exactly why the patient should be dead. But he keeps betting on the funeral while the patient is out doing cocaine on a jet ski. Closing Scion is the only logical move left. The game is rigged. Valuations are fake. The machines have won. If you can beat them and you refuse to join them, you retreat to Substack and charge people $379 to read your poetry about the collapse of society. And maybe you'll be right in 2026. Maybe the Cassandra Unchained newsletter will be the Bible of the post-apocalyptic wasteland. But until then, I'm going to keep buying the dip, not because it's smart, but because I have no other choice. Thanks for watching, and be sure to subscribe and like and comment if you have time, it really helps me out. Yeah, see you next time.